Hey, thank you, Rashmi. Okay, before your lecturer start your class, let me get to accommodate with each other. Uh, as you know that for our course, I will be assist this subject. So I would like to introduce myself again as a consistent for this term. Okay, so we not have much to say, just a little bit information that everyone should be aware. First of all, this course has a four assessment distribution, as you can see in the steering screen. So it includes class participation, control case studies, assignment, and final exam combined as a course average. So this is for your information. Also, I would like to share with you regarding to the study plan. So course mainly study in Monday, but there will be a few sessions that you will study in Saturday. Please take note on the study plan that has been posted into Google Classroom. Additionally, our course has three control case studies. I think if you're familiar with FME, the case study will be doing outside the course session. So please take note on the date of the course study. Yes. Also, this course has one big assignment, and this course will the assignment. Let's just say that it will be similar to IF for SME, but instead of you analyze local business, you will have to analyze listed companies. So for more detail, I will give a presentation regarding to the term assessment in the next session. In, adding to the course assessment, our course will not rely on class attendance. It will be rely on class participation, which divided into two. One is the coursework that your lecturer will post it in the Google Classroom. And secondly will be your participation in Zoom, which means that all students are required to join Zoom in order to earn their participation score. We will extract the Zoom recording for participation and post it for the next day. The Zoom participation will be in this format. So it will be detailed the name and the date of the class. So as you can see that there will be a lot of sessions. So I hope that everyone can join the Zoom session as much as you can. And in order to earn a full 100% for Zoom session, the student required to at least join the Zoom for 120 minutes. And if you join less than that, you will receive of the 100% score, which is a 50% score. Okay. And I will post a record of each Zoom the next day so that you can use it as a reference. And as you can see that I already posted one more post regarding to the rename of your Zoom participation in the Zoom. So please rename yourself into your family name or surname plus your first name, which is the same which as your name in your school system. In order for my formula to be able to catch the name. Yes. Besides that, there's other information that I will post in the Google Classroom. So please make sure that to keep up with all the information that I will post. I think this is all for me. And in case that you have any questions, you can reach me out as contact information I have provided in the Google Classroom, including in my email and also my department email. You also can reach out for me through Telegram, but that's only for asking question. Regarding to score review required, you are required to write a formal email because I'm afraid that when you reach out to me during my day off, I will not check your message and your message will be pushed down to the bottom of the Telegram, which I will miss it. So in order to get any score review request, please make sure to email to me in order for me to have it in the record. I think that's all for me, and I will happy and glad to assist you all for this term and hope that I will see everyone will pass this course. Thank you, Roy. I think I will be done for my presentation.
Thank you, Buna. Thank you. Right, ladies and gentlemen, if you cannot hear me, please let me know. Otherwise, I assume that you can hear me. So thank you, Mr. Buna, for sharing about your course information. What is important is your assignment. So when the assignment instructions is out, please pay attention to that. So let me introduce myself to you. But first of all, I assume that you have all downloaded our course material. So this is your FR Google Classroom. You should have come to the bottom and there's this course material and then this is our lecture note. So please download this lecture note because we'll be using it right now. So if you have downloaded that, that is good. Then you will look at this. So this is your class notes. What happened to my class note? Hang on. It sort of like disappeared. Okay. So this is the, not this, then I'm gonna open one more time because it was accidentally closed. That's okay. So let's look at the screen. On the screen, this is your financial reporting class note. It is all very nice and beautiful. So allow me to introduce myself to you. My name is Roy. My surname is Goh. I come from Singapore. And there we go. This is me. This is my name. It is nice to see you. If you have any questions, you email me here, roy@chemed.com. So a little bit about myself. I have been teaching for the past 26 years of lecturing experience, not tutoring, but lecturing. So before that, I was a full-time lecturer and let me rephrase. I was a full-time auditor. Then I became a part-time lecturer and I gave up auditing. I became a full-time teaching. So I've been teaching in Cambodia, ChemEd, for the past, since 2013. So since 2013, I've been teaching in ChemEd. So that makes it the past 12 years I've been teaching with ChemEd for the papers, financial reporting, strategic business reporting, followed by advanced performance management at ChemEd. All right. But in Singapore, I also teach one more paper called performance management. So primarily, I'm teaching two papers in two schools, one in ChemEd, one called London School of Business and Finance in Singapore. I also teach in another French university called ESSEC. So me, I'm teaching in three schools. At this moment, two schools have started. My ACCA school in Singapore, and then the ChemEd ACCA classes have also started. Your bachelor's classes have started. Come late August, early September, the French university will start. So you are here studying BA, which is a bachelor's degree. Now, this is an academic qualification, which is the same syllabus as your ACCA qualification. But ACCA, it is a professional qualification. What's the differences? So this Master in Finance, it is an academic qualification. An academic qualification means once you pass the exam, you can write your name, Mr., Miss, so and so. You have a BA, you have a bachelor's degree. But if you have a professional qualification, these two are known as a professional qualification, which is like this in ACCA is the different from a bachelor's qualification. So a professional qualification means after I graduate, I must graduate. Graduate means to pass all exam. I must graduate. And in addition, I will need the experience. Usually 3 years of experience. Then you become either an ACCA or a CA Singapore or a CPA in Cambodia. So this is how the process goes. So remember, after you graduate this paper, you are not yet an accountant. You are an accounting graduate. Just like when you study medical school, law school, you are not yet a doctor, but you are a medical graduate. To become a doctor, you go to a hospital and you practice for maybe 3 years, 4 years, 5 years, then become a doctor. So does that make sense to you? So who am I? I am a professional accountant in Singapore. So over here, I'm a professional accountant in Singapore. All right. So I'm a fellow ACCA member. I'm also a chartered accountant. So this is me, who was an auditor, who is also a professional accountant. And what you're learning here is the latest FR syllabus. This FR syllabus follows the ACCA syllabus very closely. Today is the 14th of July. Our ACCA results is released today. Last intake, there's a student. She sat for our FR for BA. And because the syllabus is exactly the same, she went on to study her ACCA exam. And she emailed me today, said that she passed her ACCA financial reporting when the results is released today. So if some of you are studying ACCA, please know that our materials, this lecture notes, right, is exactly the same as ACCA lecture notes. Next, I've finished introducing myself to you. This is your chat. All right, so when you write something, I can see. And when I reply, students, you can also see my reply. For example, at the beginning, I've also replied to the students, this is me. As you can see, I also reply to students. So when you have questions during the class, do not be shy. You can chat in the group. I will be able to see your chats. So do not be shy. So next one, you will have the content. I'm going to introduce the paper to you. Then we will start at chapter 1. Because chapter 1 is quite big, I hope to finish at least the framework today. So let's get started. On the introduction of your FR paper, please now return to your page number 5. Your exam, at this moment, the date is not confirmed yet. But if you're sitting for the ACCA exam, this is the calendar for December. The actual ACCA exam will be here. Your exam will be a Thursday, either a Thursday or a Wednesday. So it's always the first week of June, the first week of December. This is your examination for ACCA FR. So if any of you is taking the ACCA FR, this is the exam date. All right. So for your Bachelor's Financial Reporting, the BA, we do not have the date yet, but it will be early, maybe second week of December, maybe about there. So you expect to see a 3-hour exam on the computer-based exam on the spreadsheet, on the Google Sheets. It'll be worth 100 marks. There'll be section A, section B, section C. This section A, B, and C is similar, very similar to the ACCA format. But ACCA is a lot more difficult. Our bachelor is not so difficult. So section A, you will have short multiple choice question. Is it scary? I would say yes. Why is section A and section B scary? Answer very simple. There's no partial mark. What did I say? For your section A and B, it is either you earn the full 2 mark or you earn 0 mark. What did I say? No partial marks. Then student ask me, must I copy what you're writing? If you want to copy, you can. If you do not wish to copy, at the end of every class, I will come here to this class note, and then I will upload information. All right, I will upload information over here. As you can see, this is your information for lesson 1. There we go. I've uploaded some information on the screen for double entry for annual report. So at the end of every lesson for 25 lessons, including the 5 revision classes, I will be uploading information. So next question is, if you wish to copy, you can. If you don't want to copy, it is also fine because I'll be uploading all this. So rest assured, all this will be uploaded. Next, let me start here. This is your financial reporting. Today is lesson 1. The date is 14th of July, 2025. So I'll be uploading from here onwards. The previous one, nothing much I didn't want to print for you. Now, there will be also a section C. Section C for ACCA FR, they have 2 questions. You will only have 1 question. So there will be partial marks available. Only for section C. There'll be partial marks available, meaning students will either prepare from a trial balance to a financial statement, the SOFP, statements of financial position, statements of profit and loss account, other comprehensive income, statement of changes in equity, or ratio, or cash flow, and or consolidation. So last exam, for the last term, students were tested trial balance. The previous term, consolidation came up. So what will come up? There'll be a combination. 1, 2, 3, 4 topic. Any 2 of the 4. So this is trial balance 1 topic. Ratio analysis, the second topic. There'll be a cash flow, the third topic, followed by last one, consolidation. The exam tips, that means to say what to study for the examination, right? I will give you the revision classes. So how do you pass this exam? You will have education classes. You have assignment 1, assignment 2. I think there's also 3 assignments, assignment 3. Then there will be also a course project. You and your friends, individual project, but you and your friends can share information relating to your ratios project. Finally, there's a final exam. So different exams with different weightings to help you pass this exam. So if you have any questions or course content, you can chat here, or you can just email me or refer to the Google Classroom for more information. Now, we turn to page number 6. There are 29 accounting standards in your FR syllabus. This 29 accounting standards is following the ACCA financial reporting. So if you finish studying this bachelor's with me, you can also go and sit for the ACCA examination. Tonight, we will call this a checklist. A checklist means every time you see me, we will learn accounting standards. And the accounting standards will come from the framework. So where do accounting standards come from? You'll go to the World Wide Web .ifrs.organization, International Financial Reporting Standards .organization. So this is your website. It is a Google. Then I type there ifrs.org. So what's this? This is your IFRS Foundation. I'm sure you can see this on the screen. Here, you have IASB, the International Accounting Standards Board. As you can see, they write IFRS accounting standards. That is here. The IASB writes accounting standards. We will have the framework that we'll be learning. Then there will be many IFRSs, as you can see, IFRS, and there's also an IAS. Why? Give me a moment, I'll come back to that. Then you have also some exposure draft interpretations. Okay, so this is accounting standards. Recently, in the year 2023, the ISSB has been incorporated. Okay, it has been formed. Let's not use the word incorporated. Incorporated is when you start a company. It has been formed. So how does this affect us? In your FR, financial reporting, you will study IFRS S1. But when you study your bachelor's, no, when you study the master's degree, you will study both S1 and S2. Okay, so when I teach my students SPR, they learn both. But for FR, you only have one to handle, which is your S1. So where am I? I'm now back to your lecture note. On the lecture note, we have framework that you will learn with me tonight. Then at the bottom, there's also IFRS S1. Are we learning this today? Unlikely. So question is, if I am interested to see the actual framework, what do I do? Where do I go? You will go here. You will go to the ifrs.org, and then you will find IFRS accounting, and you will find the accounting standards, and you will say there the actual framework. You have to register an account in order to download. But if IASB asks you to pay money, don't. Do not pay money to read the IFRS. So let me guide you. What am I doing? I'm teaching you the framework. Let me come here to my SD card and I search for the framework of 2018. This is the 2011. There we go. You see this is the framework? Okay. So let me open this. I'm sure you can see the screen. If not, please let me know. And I assume that you can hear me clearly, loud and clear. So on the screen, this is the actual framework by IASB. It is issued in 2018. Please don't say to me that, oh, 2018 is an outdated framework. Not true. This 2018 is the current framework that everybody is using. The previous version was 2010. Now, this framework contains 80-something pages. Let me minimize this. As you can see, this framework contains 84 pages. The last two non-count, so 80-something pages. That's a lot. All right, so are we going to learn the 80-something pages? No. As a teacher, I've already summarized our framework, and that's exactly what you are learning right now. So you do not need to read the actual framework, because FR, you only need to know a few topics. And all I've done is I summarize the framework for you. Okay, after I finish the framework, I'll be teaching you your accounting standards. But first question, who are we? And what do we learn? We learn the accounting standards that IASB has written. IASB. They issue the exposure draft. ED stands for the exposure draft at the bottom, as you can see. I'm on page number 9, please turn. So you can go to this website and then you will learn IFRS come to Cambodia, come to Singapore. You are in Cambodia, I'm in Singapore right now, and come to China and also the European Union. All right, they all follow the IFRS that is published by the IASB. So do you see the differences? The other countries that do not follow is the US. So you have IASB will write principle-based. Principle-based standards. What's the meaning of principle-based standards? That requires judgments and estimates. So I try to write as neatly as I can. If you cannot understand my handwriting, please feel free to chat with me. So teaching has started, the class has started. I'm explaining to you where accounting standards come from. So we write principle-based accounting standards that require judgments and requires estimates. Example, you have IFRS 1 to 19 and you have also IAS 2 to IAS 41. All right, so this is some differences. What's the difference between IFRS, IAS? You give me about maybe 5 minutes, I'll tell you. But the world have also another group of accounting standards. You call that the Financial Accounting Standards Board. They will write the rule-based standards. For example, the US GAAP. The accounting standards in the US is called United States Generally Accepted Accounting Principles. All right, for here, you must follow the rules. No judgment, no estimates. Say an accountant in Cambodia, you buy a boat. You buy a boat. You will decide estimated useful life 10 years. If another company buy the same boat, but they think that they can only use it for 5 years, fine. So company 1 depreciate the same boat 10 years. Company 2 in Cambodia who bought the same boat, but decides that I will only use it for 5 years. So fine, you depreciate for 5 years. But if you are an accountant in the US, you bought the same boat. You don't need to judge and estimate how much is the depreciation. You simply follow the rule. Boats are depreciated 8 years. You understand? You just follow the accounting standard. No need to decide, no need to judge. No judgment, no estimates. So when students ask me, what's the difference between a principle-based and a rule-based standard? Principle-based standards, you need to make judgments and estimates. Rule-based, you don't have to. All right? Next. Cambodia, Singapore, China, European Union, you're right. You don't write, you follow the accounting standards published by IASB. So IASB will issue you an exposure draft. Allow me to show you this, says there. Do you see? It says consultation document. Let's click on this. Consultation documents mean to say at this moment, IASB is thinking to change IFRS 16, which is on leases. Today is in July. IASB have a date, a consultation date from June until October for the whole world to give them feedback. Okay, let's come back to what we are learning. So, ladies and gentlemen, back to your notes. The IASB will issue an exposure draft. They will publish on the website, and they wait for 4 months, from June to October, for example. They wait for 4 months. What they say? They wait for 4 months for the whole world, from Cambodia, Hong Kong, Malaysia, Singapore, Hong Kong, China, European Union. These are the countries that follows IFRS. Therefore, any changes to the new standard, this country called National Standard Regulator, the government of different country, will take note and reply. And then finally, after the valuation, the consultation period, IASB issues a finalized one. Then people like me, teachers, people like you, students, auditors, practitioners called accountant, we will follow the accounting standard. I keep my promise to you. I was asking you, what's the difference between IFRS and IAS? Do you remember? Okay. So this is a simple timeline. On this simple timeline, it was in the year 2001. You have a memorandum, wrong spelling, memorandum of understanding. We simply call this MOU. A memorandum of understanding, MOU, was signed between the FASB, the Financial Accounting Standards Board, and the International Accounting Standards Board. So this is when you are a very young person, like what, 24 years ago, right? So this is when you have many years ago, the FASB, IASB sign a memorandum, and then they say, let's have one single set of accounting standards. Previously, the International Accounting Standards Committee stands for C, had wrote IAS number 1 to IAS 41. But when the Memorandum of Understanding was signed, the name IASC has now changed to IASB. B here stands for the board. IASB, B is the board. Previously, C stands for committee. So International Accounting Standards, C is committee. Right? Then they will update. IAS 2 to IAS 41. So students get curious, say, Roy, stop. My name is Roy. So when I say my name is, like if student talking to me. So students say, Roy, stop. You had IAS 1, how come now no more? Because IAS 1 has been replaced. And now they will also write new standard called IFRS 1 to IFRS 19. You will study 18. 19 is not in your syllabus. When I teach SBR, I will teach them 19, which is about consolidation. For you, you don't care. I said you stop at IFRS 18 and that's all. Then you have the explanation. So if you're a curious student and you ask me, why are there IFRS? Because IFRS are written by IASB. If you're asking, why is there IAS? IAS, as you can see on the screen, are written by the previous IASC. Clear? So if you have some questions or if you are, not sure, stop me. But what you have learned on this page is not important for the exam. But I say, this page is not important, but this page, sometimes you have questions on this. So why am I teaching you this? Because one day you will graduate ChemEd. You will graduate your master's degree. You will graduate ACCA. You will be on your own. So when you are in my class, I take care of you. But when you graduate, you're on your own. You can be the CFO in the future. You may be working with the government. You may be the Cambodia regulator. You need to know where to look for accounting standards. Do you see what's going on? So when you graduate, you'll find employment. In the next 10 years, some of you may be working with the government. You become the regulator yourself. Some of you may become auditors. Some of you may become accountant. When you are independent, you cannot say, Roy, tell me what's the new accounting standard. I cannot do that because you are independent. All right, so you have to know where to look. All right, probably 10 years later, I retired, probably. So I'll be quite old by then. So in the meantime, I'm still teaching you, so don't worry. ISSB was incorporated in 2021. At 2023, 2 years after they got incorporated, was formed. They issued 2 new accounting standards. Let me demonstrate. So this is you back to IFRS.organization. You go to sustainability and they explain to you who's the ISSB. They write 2 sustainability accounting standards, S1 and S2. You don't care about S2, only S1 is in your syllabus. And you're not learning it today, so don't worry. But tonight, you have to know who is the ISSB. Sustainability is good. For example, if I do not have water, I cannot grow rice, and my business is not sustainable. Cambodia grows rice and exports rice. Cambodia's rice has won the world best rice competition many, many times. So my father will tell me that when you go to Cambodia, please buy Cambodian rice. I say I've been doing that for the past more than 10 years. So I always buy Cambodian rice when I visit Cambodia, and I back to Singapore, give to my mom, give to my siblings, and I give around. So if I don't have water, I am not able to grow rice. I must disclose so that the investors, the shareholders, they know that I am facing difficulty. But the IFRS S1 also discloses good news and bad news. If I always have water, I can disclose I am sustainable. You see, so I disclose good news and bad news that's under S1. So this page, I leave it to you to read because it's something new. It's something new, not difficult, but something new. So that we can now turn to the framework. Okay, so if you're interested, you can go to the World Wide Web, IFRS.organization, and you read the framework from the issue date March 2018 that contains 84 pages. 84 pages. How many? 84 pages. Where is that? This is the actual framework, as you can see. This framework is not written by me. I do not write accounting standards. I'm a teacher. I teach accounting standards. Therefore, this is published in March 2018. Although there are some amendments, in fact, there are quite a few amendments, but it's still published on 2018. It is published by IFRS Foundation. We're going to learn the purpose now. After that, we'll be learning chapter 1, 2, 3, 4, until chapter number 7. Because in your FR, you don't need to know chapter 8. You need to stop at chapter number 7. So, ladies and gentlemen, if you have any questions, you stop me. Otherwise, I'm now teaching you the framework. I have summarized it in your lecture notes. I'm now on page number 11. So if I'm speaking too fast, I will try to slow down. But so far, we have only learned what is important, my email address. So if you have any questions, you email me, that's important. Second thing that's important is where all these accounting standards come from. Now, we will be learning the framework. Amongst that 29 accounting standards that you have in your syllabus, we learn the framework first. Why? Because it is the foundation for so many accounting standards later. So now we learn the framework. I've summarized this for you. Let's get started. Before chapter 1, let's learn the purpose. The purpose of the framework is to achieve the following objective, the following purpose. In other words, the aim 1, aim 2, aim 3. Purpose means the aim. So must you rush and copy this? If you want to, you can. But if you realize that you are not able to catch up with me, then don't copy. I'll be uploading this later. So you have not attended my class before. It is important that you understand how I teach, how I talk. Clear? Okay, first of all, the aim 1 of the framework is for the IASB to develop accounting standards on a consistent basis. So the accounting standards are consistent. For example, the way I measure asset in IAS 16, it is consistent with IFRS 16, consistent. It assists a preparer to develop accounting policies when there's no standard. Some said, right, I don't understand. As we speak now, we don't have an accounting standard for cryptocurrency, Bitcoin. There isn't. Therefore, depending on the country that you are at, if you are in a country called El Salvador, what country? El Salvador, Bitcoin. Do you see this? Good. If you are in El Salvador, this country was the first to legalize Bitcoin. What they say? Bitcoin is a legal tender. You see, Bitcoin is a legal tender. In Cambodia, you accept Khmer Rouge, you accept US dollar. It is a legal tender. You accept. Agree? But you don't accept Bitcoin. You cannot use Bitcoin to pay for your CAMEC courses. You cannot use Bitcoin to pay for your rental. Your company do not use Bitcoin to pay you salary. We don't. Because it's not legal tender. Therefore, if you are in Cambodia, like me, I'm in Singapore, Bitcoin is an intangible asset. But if you are in a country called El Salvador, Bitcoin is a financial asset. So who tell you this? Not me. The framework. Get the idea? Therefore, we have the preparer of the financial statement on a consistent basis. Next thing you ask me, who's the preparer? Good question. Preparer include people like me who is an auditor. Preparer may also be including you because you are the accountant. Based on the trial balance, you prepare financial statements. You're the preparer. And then it allows all parties to understand. So all parties here refers to the users. Users include here users of your financial statement. So look here. Users include investor, shareholder, lender, banks, people who lend you money, Other creditors, student may think that, oh, other creditors will include our supplier. Not true. Other creditors may also include customer who give you money, expect goods and services from you. Other creditors can also include employee who give you their goods, who give you their services in exchange of a salary. So other creditors are people to whom the company must pay goods and services or money. Here, collectively call them users. All right, now, good. So this is called chapter 1. What's chapter 1 of the framework? You learn what's called a GPFR. What's that? General Purpose Financial Reporting. What's this? There we go. You are now chapter 1. You are learning general purpose financial reporting of the framework. The purpose of chapter 1 of the framework is to make decision. We have general purpose financial reporting to help users make decisions. Then you may ask me, what kind of decisions? I will say, decision 1, 2, and 3. Decision 1 says buy share, hold share, sell share. What do? You look at the financial statement and you decide this company share buy, hold, or sell. Lend or don't lend money. Settle or don't settle the debt. So this is decision making. And then you exercise voting right. Vote yes or vote no. Clear? However, the general purpose of financial reporting do not and cannot provide all information, and they are also not designed to show the value of the firm. We call these 2 disadvantages. So I'm not reading every single line, otherwise everybody falls asleep. So disadvantage number 1, the financial statements do not provide all information. All information. For example, such as your future opportunity costs. All right, future opportunity costs, we don't. Government policies, we don't, because it's all about the future. And you also do not record the share price, No market share price. Remember this. There's also no market share price. No market share price is reported on your balance sheet. Don't have. On the balance sheet, you show par value. You show nominal value, but do not show share price. Next one. There's a disadvantage number 2. The financial statements do not show market capitalization. What is called market capitalization means the active market share price multiplied by the number of shares. When you do your project, your individual project, you will need to calculate market price a lot. Okay, don't calculate. You need to use the market price a lot. Then you also multiply by the number of shares. You get yourself the market cap. Okay, let's look at our good friend. We will slowly have a lot of good friends. In this case, Intel. Intel was the market leader when there was no NVIDIA, when there was no Qualcomm. So who is Intel? Intel make your processor chips in a computer. Even Apple used to buy Intel processor chip. Those like 46, Pentium, then you have your Ultra, those Ultra chips, Ultra 7, Ultra 9, these are all by Intel. All right, all by Intel. But with AI, Intel was late to jump into AI. So you have NVIDIA that makes graphics. You got Qualcomm that supplies Samsung. So Qualcomm had launched this Snapdragon X Elite. So Qualcomm, if you're using an Android phone, probably your phone is using a Qualcomm Snapdragon if it's expensive like S24, S23, Samsung. Yeah, so this is what we call you have lost in the market price. In the 1980s, the market price is very high. Then it dropped. It dropped because it was not able to launch any AI chip. So this is the market price. Look at this. MKTCAP. What does it stand for? Market cap. Market capitalization means market cap. Sorry, on your balance sheet, you cannot see that. How did you know? This is me and my balance sheet. That on your Google Classroom, I've also uploaded one annual report. The annual report is called Fice Orchard. This is a Singapore listed company. When you say what limited, right? It means that this is a listed company on the Singapore Stock Exchange. Allow me to show you for this Fice Orchard Limited that the auditors of the company, auditors is PricewaterhouseCoopers, PwC, and that you show a balance sheet for the year 2020. There is asset minus liability, you get net asset equals to share capital plus reserve equals to the equity. You don't have any share price. I'm so sorry, this is called par value. So what did I tell you? The framework is good, but the framework have two disadvantages on page 11. So congratulations, you finish learning chapter 1. What did I say? You finish learning chapter 1 of your framework. Now we move on to chapter 2. You need to know what's called a fundamental qualitative characteristics and an enhancing qualitative characteristic. Let me demonstrate. This is on page number 12. Why? The top is page 11. The bottom must be page number 12. So here are your fundamental, turn, and you have the word enhancing. So student asked me, what is the differences between a fundamental and an enhancing qualitative characteristic? Then I will say to the student, in plain, simple English, an enhancing is a good to have characteristic. If you don't have, I am auditor, I do not fail your financial statement. Some say, right, I don't understand. What does it mean by fail the financial statement? Okay, let's take a look. The auditors for Far East Orchard is PricewaterhouseCoopers, PwC. LLP stands for Limited Liability Partnership. Yes? Okay. Point, follow my pointer. Independent auditor's report. I was an auditor. So what must I say? In our opinion, the accounting and other records were properly kept. You see what were properly kept? So what does it mean? It means that the financial statements have passed the audit. And if have passed the audit, good news, very good news. So you will not get qualified. So this is called good to have. Turn back to page number 12. What is called fundamental then? This is the important must have characteristics. I was an auditor. If my customer that I audited don't have relevance, materiality, faithful representation, I will qualify them. I will qualify means I will fail them. That means to say the auditors do not agree that the financial statements are true and fair view, no longer true and fair view. See the point now? Okay. So I'm sure you're curious what's called relevance. The financial statement must be relevant. FS means financial statements, yeah. It must be relevant for decision making. This is your framework. Chapter 1, decisions. What decisions? Decisions to lend or don't lend money, buy, hold or sell the share, vote yes or vote no. So these are your 3 decisions relevant. Materiality means if I omit, mistake, obscure, I will totally make a different decision. So this second line is the definition of materiality. Understand? Definition of materiality. Meaning, if I do not show you the information, you will make a different decision. If I show you that information, you will vote no. If I don't show you, you will vote yes. And that's called important information. If I write the information wrongly, it will result in you changing the decision called mistake. Write it wrongly. Obscure means to hide. For example, company have a policy to capitalize. Capitalize means as asset. Capitalize assets that is above $500 and will expense below 500. So this is what I mean by materiality policy. 500 US dollar is not a lot. So if you buy a calculator, what's a calculator? This is a calculator. I'm sure in your office gives you a calculator, right? Yes. Your office gives you a calculator. Capitalize or expense. You will expense off the calculator. Why? If it's cheap, you expense. But if you're an audit firm, when you buy a calculator, you buy 2,000 calculators. Who are you? You're the audit firm. And you need a lot of calculators. So if you buy 2,000 calculators, it becomes expensive. And then you capitalize. You just buy it one time, it's okay, expensive. You understand? We call this materiality. Okay, next one. We have faithful representation called substance over form. Who are you? You are an accountant. Accountant shall present financial statement transactions. I buy, sell, lend money, owe money, borrow money transactions at this economic substance and not its legal form. All right, so I will present the economic substance and not the legal form. Then if you're ready, give me examples when they are not the same. What do you mean by when they are not the same? We follow the economic substance. For example, IFRS 16 shall capitalize your lease asset, even when there is no legal ownership. You see the point? I got no legal ownership. So I recognize an asset because I control, even though I do not own the asset. That's not all yet. IAS 32. All this you have not learned today, but slowly, over the next 20 lessons, you will learn. So IAS 22 shall report the redeemable preference shares as a liability and you do not call it equity and not equity. So what's called redeemable preference share, a repayable preference share. I was looking at the website. Let me try to show you as much information as I can. Here, it's called OCBC. It's a bank in Singapore. Preference shares. Okay, let's see what we get. Do you see? This is a bank in Singapore. When the bank have issued this, do you see what it says there? Non-convertible, non-cumulative. What does non-convertible mean? Ordinary share cannot become no, let me rephrase. Preference shares cannot become ordinary share, non-convertible, non-cumulative preference share. If this year they don't pay you 4.2%, next year they don't have to pay you last year's non-cumulative. However, it doesn't say about the repayment period. That the repayment period is 5 years. Do you see this? The repayment period, there are many tiers. Some of the repayment period is 2014. Some of the repayment period is 2023. Let me rephrase. 2019, 2022, 2023. So there are some period that it is repayable. So when you have a repayable period, you are able to call it a liability. Let's look at this word redemption. Ladies and gentlemen, focus on the word redemption. The bank may redeem in whole on this date. Redeem. Do you see the word redeem? So if the bank is likely to redeem, then it is classified as a liability. If the bank is unlikely to redeem, but now, as you can see, it has passed the redemption period. We are now in 2025. And if it's past the redemption period, you classify this as a equity because no more redemption, no more repayable. So who are you? You are an accountant. You follow the economic substance. Although legally a preference share is an equity, but equities are not meant to be repayable. If you have to pay back, redeem, you can pay back, you shall call it a liability, not equity. But if you pass the redemption period, good, you call it equity. So it's quite complicated. We call that substance over form. I was an auditor. If the company don't have these three, I will qualify them, fail them. Next one. Turn to page number 13. 13. Here is page number 13. On page number 13, you have comparability, verifiability, timeliness, and understandability. These are for good to have comparability. Let's take a look. Here is your Far East Orchard balance sheet. Notice it's good to have 2 years as a comparison. So you can see, oh, last year less cash. This year more cash. Good or bad? Good. Good to have comparability. Why? Because I can compare performance. However, if our company, it is a new startup. What does a new startup mean? We just started the business and there is no comparative. There is no balance sheet, No P&L, no comparative. No comparative. Is it still acceptable? Definitely, it is still acceptable. See, still acceptable. The auditor will not qualify you. Because your business just started this year, last year non-existent. Next one, verifiability. I think lesson 3. Maybe lesson 2, but likelihood to be lesson 3. Lesson 3, IFRS 13 will have this called level 3. Allow directors' own estimates without invoices. Without invoices as fair value. That means you can record this in the financial statement, balance sheet, P&L. Any invoice? No. Although we say it's good to have invoices, statements as evidence, the director's own estimate have no invoices, no evidence. But is it still acceptable? Yes. Good to have. Timeliness. I'm not sure about Cambodia. Wait. I'm not sure if it changes the rule. The company in Cambodia have 6 months. I remember students telling me this. If I'm wrong, please let me know. So, company in Cambodia have 6 months after your year end to file annual reports, to file your annual report, the financial statements, FS. If you are late, what do? You just pay a penalty. You do not need to qualify the financial statement. Good to be on time, but if you are late, you will just have to pay a penalty. When I was an auditor, the penalty is only 50 Singapore dollar. But that was when I was an auditor. The companies have to pay penalty, how much? $600 today in Singapore, $600. So the problem is, if you are late, you are late. It doesn't mean that your financial statements are wrong, just means that you are late. So good to be on time. So if I am not accurate in Cambodia for 6 months, you please let me know. But this is the Singapore ruling. So understandability. Let me show you this. Balance sheet, right? Okay. Then you have also what we call the notes to the financial statement. So congratulations. That note to the financial statements, it is what we call good to have understandability. It is good to have a disclosure notes to improve understandability. Good or not good? Good to have understandability. But no need disclose in detail. What do you mean by disclose in detail? So this is called such as what? Such as customer name, customer phone number, customer bank account number. All right. So tell me, are you a customer of CAMED? Sure you are. CAMED balance sheet P&L. Do you think they report your name, your address, your phone number, your bank account number to everybody? Of course they don't. They don't. Okay, let's not go too far. Let's come back to the annual report. This it says here that there's a trade receivable. Yeah, it's good to disclose that I got $22 million of trade receivable in note number 13. Let's look at note number 13, no harm. note number 13. So bear with me. I'm scrolling a lot to try to quickly find note number 13. So as you can see, this is note number 13 on the left-hand side of the screen. Do you see we have 22 million of receivable? Any name of the customer? Don't have. Any bank account number of the customer? Don't have. Is it good to disclose customer? Yes. But is it necessary to disclose the customer's name in detail? No. What did I learn? Framework chapter number 3 says it's good to report understandability, but no need to disclose in detail. Is everyone clear? All right, so we will still go on a little bit more, then we take a break. So our 3-hour lesson will start on time at 7 p.m. There will be a 15-minute break. So chapter 1 of the framework, we learn the decision. Buy, wholesale, lend or don't lend, vote yes or vote no. Chapter 2, we learn fundamental enhancing qualitative characteristics. Chapter 3, we learn going concern. What did I say? Going concern. What is a going concern? If your business is a going concern, if the business, BIZ, is a going concern, it means to say the business is healthy. You will not go bankrupt. If your business is healthy, you will report asset and liabilities at what? At the cost price and also the fair value. Cost and fair value. Bracket FB. Let's say you are no longer a going concern because your business goes bankrupt. Your business is poor performing, no longer a going concern. Before COVID, I will teach physically in Cambodia 10 weekends in 5 months. After COVID, the class changed to a hybrid, meaning part online, part physical. There'll be some night in August, September, and November that you'll see me. I think 3 lessons only, not a lot of lessons, just about 3. So take the opportunity to ask me questions when you can. So over here, when the business is not a going concern, after COVID, I visit Cambodia and I realized that along the riverside, there used to be this Burger King. Is there any more Burger King there? No, because why? It closed down. Not only Burger King, many restaurants along the riverside have also closed down. It takes time for people to come back, takes time for business to grow again. So if your business is no longer a going concern, you shall report your assets at the net realizable value, which is called the selling price, at the realizable value, and you report your liabilities at the settlement value. Why? Because you must repay. So it depends if you're going concern or not. This is called GC, going concern assumption. We assume your business is healthy. Next one, chapter 4, chapter 5, then we take a break. So bear with me for 2 more chapters, please. Chapter 4 and chapter 5 must be read together. Chapter 4 will define the assets and liability, income and expenses. So chapter 4 define asset, liability, equity, income and expenses, and you define an asset because you control. And keyword, please we know that the control do not mean ownership. So students say, Roy, why did you draw a symbol? The inequality symbol is not the same. So control do not equal to ownership. Example, you rent a vehicle. You rent a property. Example, your leased asset. In a leased asset, are you the legal owner? No. Do you control? Yes. Let's not go too far. Let's come to ChemEd. You are aware that ChemEd is a physical building. Okay? Then on this ChemEd is a physical building. Do you know that ChemEd do not own the building? We have no ownership to the building. We rented the building. So if you rented the building, we have zero ownership, but do we control the building? Yes. We renovated the place, we painted the place, we turned it into a classroom. Agree? So once you control, you recognize an asset. How about you? You are young. In English, what do we say? Your parents own you. You know, I got children at home, so I say parent own the child. So what did the parents say? The parents say, come home early. What did the child do? Come home 2 a.m. in the morning. Is it early or very early? You see the point? Okay, jokes aside. Ownership and control not the same thing. We are accountant, we recognize asset when we control, not when we own it. Clear? Liability. There must be an obligation to repay out of a past event. For example, if there's no past event, I cannot recognize a liability. Example, it is a provision for restoration. Right? Provision for restoration. ChemEd has renovated the school. Agree? And when the lease has ended, you have to restore the site and return to the landlord. That's called provision. The past action of renovating have created obligation in order to make good the damages. So income, expenses, equity is important because the accounting equation says this is the residual. So what do we have? We have assets. Short form. A stands for asset. L liability equals to equity. Asset minus away equity. Sorry, asset minus away liability, I get equity. Equity is the residual, the remaining balance. So for income expenses, this one I leave it to read. Small thing. Why did I say chapter 4 and chapter 5 must be read together? Because chapter 4 of the framework define assets and liability, incomes and expenses. Chapter 5 of the framework shall recognize. What did I say? There we go. On your chapter 4, it defines. If you meet the definition in chapter 4, chapter 5 you must recognize. If you no longer meet the definition, you shall de-recognize. So let me explain further. Then we take a break. On chapter 5 is on page number 16. This is 15 on top, below is 16. So it says there in chapter 5. You have chapter 4 define, chapter 5 recognize. So when you meet the definition in chapter 4, company shall recognize assets and liability, incomes and expenses in chapter 5. All right. And if you no longer meets the definition, what must you do? You shall de-recognize. That means to say I remove. De-recognize. Meaning I remove the asset, remove the liability. That's the meaning of de-recognize. So here is de-recognize. Is the removal when you no longer meet the definition. Any questions? If you chat with me, immediately I can see. So what has this happened? The framework has 7 chapters. I only explained to you 4. And I don't think I'm speaking too quickly. So if you cannot understand what I say, don't worry, you can ask me questions and chat with me. If you understand what I say is good, now we turn to page number 17. All right, the time at home in Cambodia is just nice 7:30 p.m. at home in Cambodia. Because Singapore and Cambodia got 1 hour difference, yeah. So until 7:45, it is a 15-minute break. If there's any questions, you chat with me. Otherwise, enjoy your break. I'll see you in a moment. Thank you very much. See you soon. Ladies and gentlemen, welcome back. For some reason, the screen sharing has stopped. But now let me share the screen again. Yeah, so you can see my screen now. Then I also always open up the chat. So if you have any questions, I can see immediately. So ladies and gentlemen, today's only the first lesson. We are not very stressful yet. Why? Because you have not learned many difficult things, just the very basic. You know what is this course about. You know where the accounting standards come from because you're an accountant. And more importantly, you learn how I talk. You learn who am I to help you pass your accounting. Now, I bring you to chapter number 6, a little bit more time consuming. Why? Because the numbers come. Who are you? You are looking at chapter number 6. And as an accountant, your job is to measure the value. And that's what we call the historical cost, current value, and you're going to learn what is all this mean. So chapter number 6, because chapter 7 are important. So chapter 7 is about disclosure. Our attention now is on the framework, chapter number 6. So, ladies and gentlemen, we are now on page number 17. On page number 17, you have historical costs. What do I say? A historical cost is known as a HC. Is the original cost. It is the original cost at the transaction date. Can be the day that you borrow money, can be the day that you receive money, can be the day that you make a sales. Well, it can be the date that when a transaction took place. You call that the historical cost. Okay, let's come back. If you have the cost of an asset, can be a motor vehicle, you will take the transaction cost. Often the consideration paid is known as the purchase price, plus delivery, legal fee, stamp duty, transaction cost. That's called the historical cost. You will learn this more in lesson 3, definitely lesson 3, CIAS 16. You'll learn this more. Next one, you have a liability. This liability, you also have a historical cost. You will take the amount borrowed. Let's say you borrowed 10 million from the bank. Amount borrowed, minus away the legal fee, the accountant fee, the transaction cost. You will see more of this in IFRS 9. There, IFRS 9. So the framework is a foundation for all future accounting standards. This is the definition of historical cost. Okay, next one. Current value can be 2A, 2B, 2C. Current value can be a fair value. There must be an active market to give you a fair value. For example, you may have a property market. What did I say? A property market. An active property market to give you the fair value, FV, of land and building. You see the point? So what do? You call this the revaluation model. You call this the fair value model. You should see lesson 2. In lesson 2, you have IFRS 13. So this one, not today, but slowly in IFRS 13, lesson 2. You also have the value in use, the VIU. What's this? Present value of the future cash flow. It is called the value in use. So what's that? This is the income. If you use the asset, you call this the present value. You call this the PV, the present value. Then there's also a fulfillment value. To fulfill the liability, it is to settle the liability. This is the outflow. To settle a liability. The settlement value is known as the outflow to settle a liability. So we call that the value in use or the settlement value. Now turn to your page number 18, and you must go to the Google Classroom for class participation. Google Classroom. But before you do that, we have to understand what's called a present value formula. Now, this is important. I'll put a star there. Okay, I'll put a nicer star like that. This is a nice star. So in this star, that means this is important for you to know for your exam, for your theory, for your project, for many purposes, this is important. So we have here the present value is to take the future value times 1 divided by 1 plus R to the power of N. Okay? Present value is the money now. How much is the value now? Future value can be 1 year later, 2 years later, 3 years later. 1 plus R to the power of N. R is the interest rate, but it must be in decimal places. In decimal places. For example, in decimals is good enough. In decimals, such as 8%, you write as 0.08 R in decimal places. So 1 plus R is 1 plus 0.08, 1.08. You cannot say 1 plus 8 means 9. That means you are wrong. It has to be in decimal places. Next one, compounding. Compounding means how many period from year 0 to year 1 is 1 year. From year 3, you discount back to year 0 is 3 years. Then you have a future value. You will take the present value times 1 plus R to the power of N to find the future value. 2 new words for you. The unwinding is a new word, amortize is a new word. So stay calm. These new words, it simply means unwinding or amortize, it simply means calculate from the present value, PV, to become the future value. So from the present value become the future value, you call this unwinding. Another name for unwinding is also called amortized costs. So this is some accounting words that may be new to you, but please stay calm. I'm not done yet. Important also here on the star. I seldom use red color. If you notice tonight, I use a lot of blue colors. If I use red color with a star, that means it's very important for exam. Very important for next lessons. That's why there's a star. Okay, so first of all, what is 1? If you unwind an asset, difference between if you unwind a liability. Copy, no need to copy, but listen, yes, because you're going to practice this. If I unwind an asset, I will debit my asset, increase my asset. How do I know? Increase the asset from the present value to become the future value. I increase the asset. Then I credit the interest income. So when I unwind an asset, I recognize interest income. Next, if I unwind a liability, I charge interest expense and I credit an liability. All right, so this is called me unwinding an asset, unwinding a liability. Ready? Please, can I give you some time to log in to your Google Classroom account to go to the class participation lesson 1, please. This is what I mean. So here is our Google Classroom. You go and find class participation. Then, why is it not opening? There. Let me try again. You have class participation. Oh, thank you very much. So far, 1 student have turned in. Thank you very much. All right, well done. So if you click on this spreadsheet, now, first of all, you must go on to your Google Classroom. And this is your Google Classroom, your FR June, December intake. All right, then you will go to the class participation. Once you click on this, then the Google Sheets, it will appear like this. So I want you to try. Please try. You have 10 minutes. I think 10 minutes is good enough. So please go to class participation. Here, try for 10 minutes. Time at home is 7:58 p.m. to 8:08 p.m. Please try. Thank you very much. On the Google Classroom, class participation. All right, with 1 more minute left, allow me to show you that your FR exam have no formulas. But I think that you are studying ACCA or you are studying a bachelor's degree, there are so many papers that does present value. Let me show you. I'm supposed to find the present value. I'm given the future cash flow to restore land for 3 years. So this is a provision for restoration, right? The double entry, if you look at the checks, it will be here. The double entry is on the check. You will debit land, you will credit a provision. So this is a liability. A provision for restoration is a liability. So you will take this, you'll take present value to be equals to the future cash flow of $10,000, right? Then you will multiply by 1 divided by 1.08, right? 1.08. Then you will shift 6. Go to your keyboard, shift number 6. Shift number 6, you get a power to a power of 3. You get that? Okay. So if you done it correctly, you will get this number. So what number do I press? I press equal 10,000. All right. Actually, I don't need to do that because the formula is there. So let me just come here, equal sign to enter the formula mode of the spreadsheet. So watch the screen. 10,000 times 1 divided by 1.08, shift number 6, 3. So shift 6, number 3, you should get this amount. If I have a simple calculator, watch the screen. This is a simple scientific calculator. I press 10,000 times 1, which is a waste of time. Straight away can divide by 1.08. Shift 6 doesn't work because this is not a keyboard, right? So you go back to the XY function. Look at the screen, there's an XY. Shift, that means this is called hat. HAT. Imagine I'm wearing a hat. In mathematics, we call this HAT, a hat. 3, you don't have to close the bracket, and the answer is also 7,900. Same answer. So this is a present value. Everybody look at the screen, please. Look at the right-hand side of the screen. What's the double entry? Debit land, credit provision. So you will follow the journal entry. You call that debit and credit. Debit what? Debit land. Credit a provision for restoration. How much is the amount? Well, you can put there 7938. 7938. So when will you learn this? You will learn this on lesson number 3. Maybe lesson 4, but thereabout. So am I done? No, I'm not done yet. We still have this Google Classroom. You call that the lesson 1. If in Google Classroom, you see that there's a book called Double Entry. Good. I am assuming that you know debit, you know credit. If you don't know debit and credit, there's this book that I've already uploaded about 20-something pages to help you understand double entry. All right, if you know debit, credit, then good, leave it there. If you don't know, then just read this. So I'm assuming that you know double entry. Because in this course, you're learning to become an accountant, you need to know double entry. But I got no time to teach you double entry because this is something that I assume that you know. But I give you material to help you. So what did I teach you? If I recognize a liability at the present value, I must unwind from year 0 to year 1. And then the present value formula to find the future value, take present value times 1 plus r to the power of n. So this is my future value at year one. At year one, so take the present value of here, 7938. The decimal places can ignore. Multiply by 1.08 to the power of 1, which is like basically don't care because it's just to the power of 1. So you come here and press equal sign to enter the formula mode. 7938 times 1.08 to the power of 1. Don't need to put because it's not important. It still give you the value of 1.08. Enter. So how do I press it on my calculator? This is my calculator. 7938 multiplied by 1.08. I get this. So I show you using the calculator. I show you using a spreadsheet. Both also work. 8573. Exactly what you get on the screen. 8573. Therefore, you say from year 0, your provision for restoration was 7938 to year 1. It is 8573. You call this is increase, or you unwind by, is it unwind by an amount of the differences. So you take out the calculator again, then you minus away 7938. The differences is 635. Increase by 635. So everyone clear? Very good. So what did I teach you before? If you unwind a liability, such as a provision for restoration, you will recognize interest expenses like this. You will debit, you will credit. Debit your finance cost, interest expense, credit the provision for restoration. How much? The amount is 635. 635. Yeah. But if, let's say, if you unwind an asset, for example, a loan receivable from, I know this is not a loan receivable, but let's just say from, okay, maybe different number, from 5,000 to 5,100, a different number. Then what do? You will recognize an interest income. Then you will debit something, you will credit something. Debit your loan receivable, credit your interest income. When we learn this? IFRS 9. You learn this in IFRS 9. Not today, but I think chapter number 3 or 4 should be 4. IFRS 9. Increase by 100. Increase by 100. All right. So, any questions? If there's any questions, if you chat, I'll be able to see what you chat. But this is Google Sheet. Sometimes, I do not know why, but the Google Sheet may be missing. Like maybe I delete it or something. So to prevent it from being missing, what we do is we file, and then we download into a PDF. Do you see? Good. No, I do not want this. Let me minimize. And I want this to be a A4 and a portrait. So you can read this easily. So I will click export. It's downloaded, right? So I come here to my download folder. Just if you are curious, what am I doing? I'm using Samsung tablet. So I'm using a Samsung Tab S9 Ultra. I bought this last year. Now it is the Tab S10. So this is a last year's model, which is an Android, Android tablet, not a laptop. I stopped using laptop to teach because it's not user-friendly if I need to write a lot. So I move here. Then I want to rename. Today is FR, June, December, lesson 1.1. Your present value. Why is it 1.1? Because lesson 1 is the lecture. Lesson 1.1 is the extra information. I will show you later. Oh, then you gonna leave the word PDF there. So one more time, this is called FR, June, December, text 1.1, and that you learn with me a present value. Then rename. Good. So after I rename this, what I'll do is we have technology nowadays. I can share with you like that. I edit. Then I go and upload and then browse my SD card. Actually, recent file. Yeah, this is quite cool. So I have an iPad. I'm not saying iPad is not good. I'm just saying that Samsung is a lot better to teach and to do filing than iPad. So where's my iPad there? This is my iPad. I got a very nice and big iPad here. I use it for my scrolling to remind me what I need to teach. Yeah, so that's all. I use it for only scrolling. But when I actually teach, I'm using a Samsung. This is called Samsung Notes. So when you see me copying, pasting, moving things around, it is a Samsung Notes. Very powerful software. So we're not here to discuss computers, although, I enjoy discussing computers with you. Yeah, so I hope you understand the class participation. So as Mr. Buna has said, you earn point for the class participation score. So if you have done this, thank you very much. If you have not tried, based on that, there's a deadline for 2 days. Yes, we have a deadline for 2 days. 2 days. So it's not about whether is it right answer or wrong answer. As long as you participate, it's fine. You can participate, and you can give a wrong answer, but it's totally fine. You'll not be penalized at all. It is to encourage you to try. Even if you make a mistake, it's fine, it's okay. Important is you try. All right, so this one we're done. Next, the current cost can be a current replacement cost. Where am I? I'm on page number 18. If you were to buy the same asset today, you will still take the amount plus the transaction price. So this is simply your current cost is today's replacement replacement cost. The current replacement cost. Next one, if you have a liability, the current cost of a liability is the amount that you receive. You see, the amount that you receive, but you must minus the transaction cost. So minus the transaction cost. It is like your asset historical cost. In your asset historical cost, you will plus transaction cost. You will minus the transaction cost if it's a liability. In the current cost, instead of like 5 years ago cost, you take it as a cost today, today's cost. So chapter 7, really nothing much. Chapter 7 is about your disclosure notes. Okay, disclosure notes to the financial statements. So this is something that you can read. So do you have any questions at all? If you have no questions, I would like to invite you to page number 19. On page number 19, you have this interpretations committee. What do you call it? IFRIC. So what's the purpose of the interpretations committee, or where can you see that? We go back here to your IFRS. So this is your IFRS. You see? Good. You go to accounting standard. When I say accounting standard, at the bottom here, accounting standard, this one, click on this. And then you have at the bottom, framework. Congratulations, you finished learning the framework. And you know that IFRS is written by the IASB. The IASs are written by the OIASC, but it's updated by the IASB. And then you have the IFRIC, the Interpretations Committee. So if you're not sure what they do, they write in inverted commas, user manual. What did I say? They write user manual. What's a user manual? When you read accounting English, let me demonstrate. Let's just randomly choose one paragraph. Okay, this is chapter 3. Do you see chapter 3 of the framework? Chapter 3. The objective of financial statements is to provide information about asset, liability, equity, income that's useful to a user in assessing the prospect of future net cash flow to the accounting reporting entity and the management stewardship. Then this information is provided. A very boring English. Do you know that there's only one full stop in that whole paragraph? Such a big paragraph, only one full stop. So this is called accounting English. This information is colon, and here you can a full stop. Do you notice how long the full stop is? 3.3 A, B, C, D, C1, C2, C5, there's only one full stop. So welcome to accounting. The English is not user-friendly. You have a long paragraph and the full stop comes so far later. So get used to accounting English, which is not very user-friendly. Reporting period, just 12 months. Notice that they refuse to say 1 year, 12 months. And they talk about so much. Why don't you just say reporting period 1st of January to 31st December, but they never say that. So this is called a very precise accounting English. Why do I say that? Because accounting standards are not user-friendly. When you read the accounting standards, they are not user-friendly. So what do you need? You need an interpretations committee to write you the user manual. In inverted commas, the user manual for accounting. The user manual. The user manual for understanding, interpreting, applying accounting standard. So do you see what's happening here? Because not many people read the accounting standard and they understand. First encounter, English is a problem. Second encounter, there is not enough example to guide us. So when you lack the examples, what do? You have the interpretations committee. So you can read this to understand what they say. So come to my class. My name is Roy Goh. Nice to see you. Okay, come to my class. There's only two things I want out of you. Two things only. Number one, knowledge. You hear me talk, you got knowledge. Number two, the application. So try this. Try this for maybe, I think 3 minutes is a lot. The time at home is 8:28 p.m. to 8:31 p.m. Try question one, please. Please try. Thank you. Any suggestion? A, B, C, D, there's no partial mark. Either you get the full 2 mark or get 0 mark. So many students suggest B. Very good. You have the right answer. Oh, very good. Most students, in fact, all students chose B. And if you're still trying, well, take 1 more minute, please. That's why you don't need 3 minutes, right? Yeah, you don't need. Thank you for your trying. Right? Thank you. Well done. It is not difficult. So allow me to explain. If you are still struggling, you're not sure why A, why B, okay. As you, as a student, you shall read my notes. Because the original framework is 84 pages, I summarized with like only 5 pages, 4 or 5 pages, right? So keyword is not a duty. Not a duty of the IFRIC. So we write the word duty of the IFRIC question mark. Duty to interpret. Yes, because the interpretations committee, right? It is indeed to interpret. Interpret is correct. To interpret is correct. So to answer A, interpret. D also interpret, it is a duty. So you write there, yes, it's your duty. And yes, it is indeed your duty. Totally correct, your duty. To provide guidance, to guide you, is also to apply the accounting standard. So guide is also a correct word. Notice I didn't read every word. I look at the key words. So when I was teaching the French university, so which the university I was saying that this is the French university called My Asset, ESSEC. Do we have that? ESSEC. So sometimes I have a Cambodia student also studying at this asset business school. So recently, she emailed me. There's a student from Cambodia, but she come to Singapore to study this. And then she emailed me and said she's studying for some master's degree. Can I help to write her a reference letter? I said, sure, why not? So I did that. So this is a student from this school asked me one time. She said, Roy, you keep on saying that, find the keyword. But I am a student. I do not know what is the keyword. I said, you made a very good question. But the more you practice, slowly you will begin to understand the keyword. So if you have gotten the right answer tonight, congratulations. If you did not yet get the answer, don't worry, because today's only lesson 1. Your exam is in December. You still got time to revise. Okay. Interpret, guide, interpret. This is the job. It cannot be the answer. The answer is asking you for not the duty, not the job. To work directly with the national standard setter, it is not the job of IFRIC. I started telling you story tonight. It is the job of the national standard setter. The job of the national standard setter on page number 9. The top is page number 8. The bottom is page number 9. Therefore, if you are asking me which is the job, I will say to you, see page number 9. It is the national standard regulator. National standard setter, the regulator, the government, right, will work with the International Accounting Standards Board, in bracket not the IFRIC. This is my IFRIC. So the answer is B. Like I say, if I've gotten B as the answer, congratulations. If you did not get B as the answer, it's fine. Important thing is that we learn. Try question 2. A little bit tricky. Do not be in a hurry to give me the answer. Try question 2. Don't be in a hurry to give me answer. Think. Because most students don't get this correct the first time. Most students do not get this correct the first time. Find keyword first. Don't rush and give me the answer. Read and think. Some say, Roy, I don't understand what the question is asking. What's the keyword? Thank you. The question is asking for comparability, true. You need to know these 2 keywords. The rest not important. Comparable, good to have comparability, true. So you say, chapter 2 of the framework about comparability, true or not, question mark. Sentence 1 first. Sentence 1. Where? Here, sentence 1. True or not for sentence 1. One at a time. Not true. Jessica is correct. Thank you. How about other students? False also correct. Moi Boy is also correct. Tiam Heng is also correct. Sata is also correct. Oh, B. Oh, most students go to B already. Wow. Most students choose B. All right. Yeah, some students choose D. Okay. 2 is incorrect. If you think it is not true, false, you're right. So it's about B or D, right? So most students choose B. Quite a lot of students also choose D. Sentence 1 first. No, it do not enhance comparability. Why? Because to permit, listen to my English. To permit is to allow. Everyone makes sense, right? To permit is to allow. Alternative, another word for alternative means to allow. Different. Different treatment. So let's look at my English. To permit alternative treatment is to allow different treatment for the same economic phenomenon. What does that mean? For the same transaction. To allow different treatment for the same transaction, enhance means improve. No, rubbish. It don't improve comparability. It do not. It do not enhance. And now for enhance in bracket, I can write it improve comparability. So sentence one is easy because a lot of words to explain. So a lot of words doesn't mean it's difficult. So no, this is not true. If it's not true, either A or D. Sorry, either B or D. My apologies, either B or D. That's why one is out, C is out, A is out. A is wrong, C is wrong. Answer is either B or D. So if you choose B, you are right. Why? Of course, I will explain why. I'll not stop here, right? Okay. So what does it say? To be comparable, I need to be consistent. I need to be uniform. Okay. So we say although consistency, uniformity. Consistency means uniformity. Improve. Comparability. It is not necessary to be consistent. I write it down so that everybody can see, go back and revise when you go back home. Let me give you an example so they can understand what I mean. For example, year one, you charged straight line depreciation. Nothing wrong, right? And come year two, you changed to reducing balance depreciation. So year one, you use straight line, year two, use reducing balance. Is it consistent? No. It is inconsistent methods. Last year, straight line, this year, different method, inconsistent, right? Inconsistent methods. But both years, one and year two, they are comparable. Why? Because you have charged depreciation. You understand? Just like last year inventory, I used first in, first out. This year inventory, I use weighted average. Is it consistent? No, not consistent. Is it correct? It is correct. Interesting, right? Okay, so, some more. Turn to question 3. Question 3. I will be uploading this. So no, you don't have to copy. Don't copy. Don't waste time. Don't copy. I'll upload this. I will show you. I promise. I will show you how I teach. But try question 3, please. Find keyword. If you spotted the keyword to be recognized, you are correct. What did you learn? You learned that if you meet the definition in framework chapter number 4, you shall recognize as an asset liability income expense. So now the question is asking you, recognize asset or recognize liability. You see, where? Recognize asset, recognize liability. 1, 2, 3, 4. Number one first. Some of you not very sure. It's okay. Stay calm. Number one first. Recognize staff training as asset or liability. Talk to me. Staff training. Staff training. The word staff, the word training. Staff training. The amount not important. Don't care about the amount. Expense. Very good. Well done. You say expense. Why? Because you don't control, right? Therefore, you say it is an expense. If it is an expense, it is not an asset. So, staff training is an expense. It is not asset. Why? Because the company do not control the staff. The staff is free to resign. The staff is free to fall sick. The staff is free to pass away. The company say, don't die, don't pass away, don't fall sick, don't resign. The company cannot say that. So the company don't control the staff. So staff training is an expense. If it's an expense, it is not asset, not liability one. The question is only asking for asset and liability. Expense is not true. So the answer 1A is out. Maybe 2, 3, 4, maybe B, C, D. Let's check. Green has been told by a brand consultant that the value of its internally generated brand is 2 million. I know this is not fair. Why? Because you must wait until you learn IAS 38. Ladies and gentlemen, this is your page number 64. Do you see on the top 63? This must be 64. IAS 38. You have not learned this yet, so stay calm. Don't be too stressed. 64 on top 65. Do you see page 65? Internally generated goodwill. You cannot recognize. Goodwill here means your brand name. You cannot recognize unless it's a business combination. Then goodwill of a business combination can recognize. All right. But your internally generated goodwill can recognize. Which page is that? 65. So stay calm. You write there, C, page number 65, IAS 38, prohibit. That means stop you, don't allow you. Prohibit internally generated brand, means goodwill, internally generated brand as an intangible asset. So any asset? No. So you say cannot recognize asset. Why not? Because there's no reliable manager. I know this is too unfair because you have not learned page 65, but I'm going to start somewhere. So please don't feel sad that you have not learned page 65. Okay, today we learn the framework. When you learn 65, you understand this because you have to revise the book again, right? Try question 3. You will be able to answer this. This one, apply logic, answer 3 is easy. Your name is Green. You sue your supplier and you are likely to win. Have you win yet? Is the contingency probable? Very good question. Very, very good question. So you are looking at the word contingency. Well done. I'm glad you write the word contingency. Thank you very much for your help, Raksmi. Thank you very much. Likely not certain to win. That means you have not yet win. You will soon learn with me IAS 37. Just a moment, I'm looking. Too many pages. I need to find 37 so that you know the page number. Okay, financial liability is near 37. Here it should be 37. All right, do you see this is called page number 109, IAS 37. Do not recognize a contingent liability, page 109. Do not recognize a contingent liability. So because it's not probable, very good. Raksmi is correct. Well done. So you do not recognize a contingent liability, page 109. So don't worry, stay calm. So here, page number 109, IAS 37, do not recognize contingent asset, contingent liability. In this case, the contingent asset. But here it's called contingent. So here, you do not recognize the asset. Why? IAS 37 says so. So, next one is here. Green sold goods, 5-year warranty, you expect some claim. In the near future, you will see me using this company a lot, called BMW. Give a 5 years warranty. Do you see this? 5 years warranty. So let's take a look. If you are BMW Singapore, can you see BMW Singapore? I am your customer. I buy a BMW from you. How many years of warranty must you give me? Do you see it says there 5 years? 5 years, right? So sometimes when you sell a good to the customer, you must give a warranty. What did you learn? You learned that if there's a past event, you shall recognize a liability. The only answer is D. So the past event of sales have resulted in an obligation to provide warranty. So what do you call that? You call that IAS 37, provision for warranty claim. So why there's a past event? Last question, then we say goodbye. Last question. And I have a habit. I will tell you when you see me again. This is FR lesson 2. You will see me again on 19th of July, this Saturday. 2025, this is a Saturday. Again at 7 p.m. No. 7 is in Singapore time, sorry. 6 p.m. Okay. 6 p.m. Because 7 is a Singapore time. So this is where I would have this habit. What's my habit? I'll tell you when you see me again. All right, so that all this you can try. Question 5. Try question 5 to question 9. All right, try question 5 to question 9, if you're not too busy. So question 4, now my turn. During a period of rising prices. So this question is asking you during inflation. Prices goes up is called inflation. Which ABCD apply to the historical cost? Because I'm looking for word don't apply. I'm looking for the called do not apply. Do not apply. Do not apply. So they contain mixed value. Mixed value. This is correct. This is correct. Why? Because on your balance sheet, on your non-current asset, on your property, plant equipment, some are at low historical cost. Some are at high market fair value. Therefore, the word called mixed value, a mix between historical cost, fair value, a mix is actually correct. Mixed value is correct. Correct means it applied. So sentence A is quite straightforward, right? B, it is difficult to verify. It is not true. Why not? Although the transaction took place long ago, 5 years ago, 20 years ago, all right? Invoices exist to give you evidence to verify. 5 years ago, 5 years ago, you buy your laptop. 5 years ago, you buy your laptop. Do you have an invoice? Although it was 5 years ago, sure. So who says that all transaction that happened many years ago cannot have an invoice? Not true, right? They understate asset, overstate profit. Is it true? Yes. So the answer is B. C is yes. Why? Because low historical cost, low asset. So you understate asset is correct because you got low asset, right? Not done yet. High or low depreciation? Low depreciation. If you got low depreciation, high profit, don't you agree? High profit is correct. High profit. And C, they overstate gearing. They overstate gearing. Is it true? Well, also yes, but why? Well, first of all, you need to know the gearing formula. Gearing formula is to take debt and I divide by debt plus equity. At your historical cost, that means there's no revaluation. No revaluation. Lesson 3, you learn revaluation model. So no revaluation reserves. No revaluation reserves in equity. No RR. Revaluation surplus, revaluation reserve, I don't have, right? Therefore, yes, I got low equity. So let's look at what happens. If I got low equity, so this go down, right? The denominator go down, then this will go up. Don't you think so? It will go up. So is it true that you overstate? Yes. it overstate, overstate gearing. So it will have high gearing because it's got low equity. I do not need you to copy because I promised you before at the end of class, I will always upload all this. So what happened next is I will do this now. I will minimize your chat. So this is our page number 23. I will go to my page. Then I will select. So anything that I've taught you for tonight, starting with lesson 1. All right, so I didn't copy every page, but I copied enough pages. Do you see this? I selected all these pages. Then I go to this and I save file as PDF file, save in my SD card on ChemEd CE. My first lesson was in July 2013. I've been teaching at ChemEd for the past 12 years. It's a long time. So this is now 2025. Then I go to FR and I am done here. I will save this as JD Hex 1. Hex 1 means lesson 1. 1.1 means of lesson 1. I have some more information to share with you. Then I save this again. Then I will call up your this one. All right, I go to the Google Classroom. I go to the classwork. Do you see this is lesson 1? Okay. Lesson 1, class notes. Lesson 1, I edit. Then I upload one more file. So this is how I teach. Different teacher may teach differently. So you as a poor student, you see so many teachers. You have to get used to different teacher, different learning style. All right. So if I were to bring you to the Google Classroom, so how do I teach? I tell students, don't need to copy, listen. Because we got technology, after the class have ended, you must come to the class note. I have uploaded lesson 1, is my handwriting annotations. I've also uploaded 1.1, which is our class participation. They have given you more information about double entry to help you. Far East is my class example. You learn an accounting standard. We look at how a company applied. This is called an example. So, is there any questions for the first lesson? If you have any questions, you can ask me. If you're shy, you can email me. Otherwise, yes, we end the class. Thank you very much for your time and attention. I will see you again this week, Saturday. So have a good night rest. Bye, everyone. Good night and goodbye. Thank you. See you on Saturday. Goodbye. Thank you.